Very good morning to you guys. Hope you're doing well and you're having a nice weekend. You're probably aware that we're taking snapshot data of the bubbles. You probably might be aware of that. You may not be, but we're taking data from the last 4 hours, where they're heard by position 4 hours ago, and then we're looking at the 1 hour change, and then the 30 minutes. But we have to remember this is past data. So I was thinking, well, we've got past data. Why can't we get a what if scenario about the future? So we can see 0.514. That's equivalent to the change in the past, but this is the future. Okay, so that's quite clear, right? And so that in itself is quite amazing because we can get verifiable metrics for the future. And remember, the nature of the foreign exchange market is that if we have a significant move on one currency, we'd want to see a significant move on the other currency, because you wouldn't just trade the euro basket. You trade the euro versus something else. So here's an example where we, let's say for just like hypotheticals, is that the herd are quite fearful about the euro because there's these tariffs, noise, and this news, and there's lots of like fear basically. So we can see them short, so we can see them sell, perhaps a little bit over the last 4 hours. Now some news event has appeared on Twitter and the fear is escalating, and what they're actually doing, they're actually really shorting it, and then them selling it is making it a buy because we're contrarians, okay? And what it does, it gives us a projection for the future, and assuming that they hold on to that bias, well, see, that's the huge caveat, is that we'll get a verifiable metric for the future in the average of 4 hours, 1 hour, 30 minutes. So in an hour and a bit, this is where the bubble should be. And we can see, for example, maybe they would do the Aussie, for example. Let's say they've gone long slightly on the Aussie, and then they add long a little bit by 1%, but then they decided to really buy it for whatever reason. Perhaps they just do what, maybe say, saw some news event or some statement coming out from RBA, and they've gone really long. And of course, we've got this difference between the Aussie and the Euro, and we can see the future bubbles. And so this would make the Euro Aussie a buy for the future because of that predictive nature of that what if scenario that we forecast here on our table. So remember, you need to know about the bubbles. So we've got the 50% line, so that's the key, because it's the bull bear divide. And so if something's up here that they're long, but if they add long in the future, it's going to make it a sell. If something's down here, it's a buy, but if they add short, it's going to be more of a buy. So they're long already, but they add long, it's going to be a sell. If it's short, but they add short, it's going to be more of a buy. So we have to be a little bit careful with the euro, in so much as ideally we want the bubble to be down here, because what's happening right now, they're long and they've shorted, but we're still above the 50%. So we've got to be careful. If you remember, gold was down here, it moved, but yet the price still went higher because they were still net short on gold. Okay, so it's really important. So ideally the euro bubble comes down here if you're looking for the buys. Aussie is an okay place because we're above the 50% and they've gone long. So that's what you've got to be careful about. This is kind of like a mixed area. This is like a mixed area. But generally speaking, if something moves left, it's a buy. If something moves right, it's a sell. But ideally, in an ideal world, is that we'd have that lower down below 50%. And that's just that's the projected values for the bubbles. And it gives us a trade setup on that particular currency pair. But like I say, ideally we'd get the euro lower down, and then it'll be a good setup. So we'll undo those changes. And if you're interested about the formulas, they're up here. And you can see how we've got increments of 0.5 to 1, 1 to 4. So that's equivalent of half an hour to 1 hour, 1 hour to 4 hours. Okay, so we've gone from dun, 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 da, da, da. So past, 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 future, more future, further out, 4 hours time. And then we've got the average change of the future increments, and that gives us the average bubbles. We need to undo that, and it's probably reset. So still early days. It might be that we need to perhaps have a look at the AI to look at that formula, but I think it's correct. It looks fine, and we'll just have to see how we go. And I've just tidied this future bubbles up and make it look a little bit more presentable, and then we'll be ready for the week ahead. So we've got predictive bubbles now for the future, which is pretty amazing.